Let's take that same example that we just worked through in Periodic Inventory System Part 1, and let's assume that the problem asks us to figure out the cost of merchandise sold, and the problem asks us to figure out the cost of ending inventory. Can we do that? Yes, we can. But we have to know if the company that we are working for uses FIFO, LIFO, or weighted average. So let's assume FIFO here. The questions you'll have to ask yourself first is, which items did we sell? Well, we know that we sold 9 items, right? Okay. And so now we've got to figure out which 9 tricycles we sold. Well, with FIFO, it means that the first items in were the first ones to go out the door. So we must have sold 4 of the $25 items, right? And then we know that we sold 9, so we must have sold 5 of this second layer of inventory to make up that 9. And then we must have sold 0 of the third layer of inventory, because with FIFO, the most recent purchase is usually going to make up our ending inventory. Okay? Then can we figure out which items are left over? Well, what we'll do is we'll say, well, all these 5 of the $35 units are left over, and one of these $30 units is left over, because we know we had 6, we sold 5, and 1 was left over, and this does correlate with the number 6 here, that we had 6 left over. Now, you have to do some math to figure out the cost of merchandise sold, okay? The cost of these 4 tricycles is 4 times $25 each, $100, and the cost of these 5 tricycles is 5 times $30, $100 plus $150 means that the cost of merchandise sold would be $250. Now let's look at the cost of ending inventory. This tricycle cost us, well, let's see, let's say equals 1 times $30 and equals 5 times $35. 175 plus 30 means that our ending inventory cost us $205. So this is the periodic inventory system using FIFO.